Okay, welcome traders. It's February 3rd, 2021. This is Heart Pumper coming to you from theclosingprint.com. We're going to do a webinar about risk management, how to look for relative strength stocks, position sizing. I have some Excel sheets to show you. Again, this webinar is for educational purposes only. Trading securities comes with substantial amount of risk. I may own or have positions in some of the securities I am talking about. I do not offer any financial information. You need to consult a financial advisor and trade at your own risk. Now, the disclaimers out of the way. The first thing I want to go through is I want to talk about position sizing and I want to talk about portfolio management. Okay, so the first we're going to look at here. Hopefully everybody can see this. This should be an Excel sheet. If you can't see it, let me know. But what we're going to go through first is your position sizing and your risk management. And then I have another risk management sheet I'm going to pull up. So this Excel sheet here I've set up, it's basically a simple Excel sheet that new traders should be using to track their portfolio position sizing and how much risk they are going to have on each trade. Now, I just did a basic portfolio size of 50,000. This could be 20,000. You could change it to whatever you want. But what I want you to notice is column E here. This is your stop loss. Okay, so 3%, 5%, and 7%. So this would be stop loss from the price of your share price entry. So I just did a round number of $50 share price entry, whatever your symbol XYZ is. It could be Apple, it could be whatever that is. But your portfolio size is here, and this is your portfolio percent risk. Okay, so that's your total risk. So 1% of a $50,000 portfolio would be $500 of risk. This 0.5% would be $250, and 1/4% would be $125. So if you had a $50 stock, okay, and your stop loss was 3%, and you wanted to risk $500 of your portfolio, which would be a total of 1% risk, which I would say would be the maximum amount a new trader would want to risk. This gives you the position size that you could buy, 333 shares, and your stop loss would be $48.50. This is what we call a 1R risk. So whatever that R risk unit for you is, can be $1.50 here with a 5% stop loss, it would be $2.50, and a 7% stop loss would be $3.50. So as you see, as you give the position size a slightly bigger stop loss, your number of shares goes down, obviously with your stop loss percentage, okay? If you follow the IBD and CAM Slim rules, their maximum stop loss is roughly 7 to 8%. For new traders, I would encourage new traders to do in between a 3 and 5% stop loss, or in between a 5 and 7% stop loss. And this also does not take into account volatility of stock, or ATR. If you're trading a $50 stock in the ATR, which is the average true range, which is the range that a stock can move intraday, is basically, if it's an ATR of 3, then stock could move $3 either way. So if you're running a $1.50 stop, which would be very tight for an average true range of $3, then you could possibly be stopped out intraday. Now, I'm not talking about day trading at the moment. I'm talking about swing to a little bit longer term trading. That's what I do in the trend following room. So most of our stop losses will be running between 5 and 7% because we want to give the position the ability to oscillate intraday, but not stop us out and be able to capture the longer term trend. So hopefully everybody understands this. I can post this, or I can show everybody, but this is, again, just a simple Excel calculation. You can change your portfolio size to whatever you want, but I encourage each new trader, or actually trader that wants to really dig in and journal, that they should have some type of sheet like this set up so they exactly know before they enter the trade what their stop loss is, what their share size is, and then how much they're risking on each trade. Okay, so that brings me to the next point. If you had let's say X, Y, Z, A, B, C, and D, E, F positions, okay, these would be your positions. So we'll just put those in there. Oops. And you are risking 1% on each one. Oops, sorry, 1%, 1%, and 1%. So, oops, sorry. 1%. There we go. So your total portfolio risk, if you had 1% risk on these 3 positions, would roughly be 3%. We've just added that. So then over here, you would add your $500 risk. Okay, so 500, 500, 500. So your total portfolio risk at this time with your 3 positions would be $1,500. So 3% of 50,000 would be $1,500. So if you walked in, let's say tomorrow, today's Wednesday, you walked in tomorrow, Thursday, and all 3 of your stop losses were hit at what your stop loss point is, your maximum risk to your portfolio would be $1,500 and 3%. I encourage new traders to start basically to risk between 1/4 and 0.5%. So if you risked 1/4% on each one of these positions, then your total loss, if you all of your positions would have hit, would be 1.25%. So that would be 250, 375 total stop loss if you were risking only 1/4%. So it's a significant difference than $1,500. Okay. So if this portfolio size was 25,000, then obviously the 1/4% would be much smaller, and your 1% would be 250,000. So I want people to understand that managing risk is your job one. Okay, a lot of people just come into the trading systems, and they want to just look at the profits they can get. Okay, they've looked at GME, they've looked at AMC, and see all these people making thousands of millions of dollars. Okay, or whatever. You can't do that with a small portfolio. Okay, you can't even do that with a large portfolio without taking a huge amount of risk. All right. So if you have a 3% loss, then you need to gain 3.2 or 3.5% back on a position or your total portfolio to get back to even. So if we had a max loss of 1,500, you're going to have to get 3% and higher back to get this $1,500 back. Okay, so you would need 3 more positions to move at least 1% for you to regain this. All right. And it gets substantially bigger the higher your losses are. So if you lose 10% of your portfolio, you have to gain 11% back. So 10% would be 5,000. So then I would have to get over $5,000 back to get back to even. All right. On 3 positions. So that takes a lot of time and that's a lot of risk. So that's why I want everybody to keep their risk as small as possible when you're starting out as a new trader. And even as a seasoned trader, depending on what's happening with the market, I will oscillate between this 5 and 7 and 3 to 5% stop loss, depending on if the volatility is picking up and the VIX is getting higher. All right, it's just a fact, and that's my job. My first job is to manage risk. If I don't have any chips to come to the table, it's just like playing poker. If I don't have any chips left, if I've went all in, I've lost all my chips, I can't play the game. So I want to be able to play the game as long as possible to be able to increase my profits exponentially. All right, so hopefully everybody gets that. The next thing that we're going to talk about is in this swing tracker that I set up. So this is a mock portfolio that I started back in November. All right, everybody can see my entries, my exits, and the changes. All right, so all I was doing was using a 10-week moving average as a stop loss, and I hadn't got stopped out of any of these positions as of when I pulled this. I think it was Monday. Okay, so I used a small portfolio, $30,000 position size. And what I want to show you here is if you go by IBD rules, if you have a small portfolio, you should probably have in between 2 and 3 positions. 5 should be your max position. This percent here of my portfolio is probably higher than most people should run. Most people should run between 10 to 12% max position size of their portfolio. Okay, so if you have a $30,000 portfolio, 10% means you should only have $3,000 at risk. But I'm showing you my position size here of 6,000. So that's double what most new traders should be running. All right. I know it doesn't sound like a lot of positions, but again, if you go back over here and we look at our risk size, if you're risking 1% on 3 positions, that's 3% total. So that should be the max you want to risk if you're into a trend following or even a middle to intermediate term swing positions. You don't want to have a lot of positions on because first of all, you can't manage it. Second of all, your position sizes are going to be so small that you can't capture the upside that you need to capture. Okay, so if I have 30 positions on and each position is only 1% of my portfolio, but I have, let's say, apps that has went up almost, or Snap that's went up almost 40%. If it's only 1% of my portfolio, I'm not really going to gain anything. I'm not, this number right here, this gain right here is going to be so minor. I mean, we're talking a couple $100 that it's not really going to change my portfolio any. All right, so we want this. We want the 40% gains on our portfolio. We want the 30% gains. We want the stocks that are going to go up 20, 30, 40, 50, 100%, 300%. If you read How to Make Money in Stocks, that's where the life-changing money comes in and your exponential growth on your portfolio. Okay, if I make 1% on each one of my positions, I'm not doing anything. I'm not really changing. Basically, I'm just bobbling around between gains and losses. Okay, so we got to be able to capture a much bigger gain than what our losses are. Hopefully that makes sense to everybody. So what I did across here is for new traders that I help mentor and I do private mentoring and I help set up for them is I automatically set this 3%, 5%, and 7% stop loss up. So you already know when you go into the trade with this entry what your stop loss is going to be. So we can set those up and you can do bracket orders and toss, you can do stop losses in all your other brokers, but we can go ahead and set those up so there's no questions asked. It's a binary number. As soon as your stop losses hit, you're completely out of the position, no questions asked. Okay, so it takes the emotions out of the trade, we automate the trade, and then you don't have to worry about it. All right, so then when the market's moving against you or it's moving for you, everything's taken care of. The plan is already laid out. I do not enter any trade until I have these boxes filled in. I know exactly what my percent stop is going to be, and then I look at my percent gain. So then we can set alerts above this. So Zoom info, we're actually in it now. I re-entered in the trend following room. I think we're up 13% right now. I posted that real time. So we can go through and I'm going to pull up the chart and I'm going to tell you my thinking on this chart. And I'm going to show you exactly how this trade is playing out in my mind, and whether that plays out and we get the gains, then hopefully we will and be able to hold for a while. But again, I already have a 3% gain alert set. I have a 5% gain alert set, and so on. We can do 7 and 10%. If you follow IBD, basically you should be taking profits at 20 to 30% because almost 90% of the stocks that move 20 to 30% will start coming back. That's a good area to take profits on a portion of your portfolio, and then we'll go ahead and move our stop up on the rest of our position. The other thing I wanted to talk about was if you're in a position, you actually can tier your stops out if you want, if it's something you're trying to hold for a little bit longer and is holding some areas. So let's just say I entered 100 shares of Zoom Info Technology, but I wanted my average stop loss to be 5%. Well, I could set a stop for 30 shares at 7%, 30 shares at 5%, and 30 shares at 3%. So what this would do is this would allow the trade to oscillate intraday. Even if my 3% stop loss is hit, my 5 and 7 may not be hit, and I still may have a good average on my position. And then if it takes off 13%, it'll cover all my stop losses, and then I'll be going into the gains. So it's always a good idea to tier your stop losses also if you wish. Now, that is a market that's cooperating. The market would need to be above the 21-day, above the 50 and the 200, and we need to be trending up. That's the only time that I would tier my stop losses. If the market is in a downtrend and under the 21 and possibly heading to the 50, I wouldn't really tier my stop losses until we start having a trend change and then moving back up. I'm going to go ahead and pull this over. This is one of my students that I was helping, and he sent me the trades that I pulled, and I went ahead and just put it in a January trade review sheet for him. And so basically what I showed was how you could have a 18% win rate and still be positive for the month. Okay, these are the gains and losses on the positions. And we only had 3 winning trades. 3 winning trades out of the 13 trades that were placed, 16 total. And we walked away with $56 profit for the month. Okay, the reason we did this is we were able to keep our position size correctly. We capped all of our losses. Of course, this loss was 7.8. I believe these were 2 trades here. So this one actually was, can't remember about this one, how he explained it to me, but let's just say we capped all our losses at 8%, less than 8%. So if we would have changed these losses to 3%, this would have changed our losses here, and we would have had a little bit better number. Okay, this is a small account. I believe he's running just over 25,000 on the position. So he was close to the PDT, which is a pattern day trade rule. You can only have 3 within 5 days. So that's what we're running. But Neri was a great 20% win for him. And also he was in that with me. We kind of mentored. I told him when to end, and I kind of helped him through that trade, walked him through that, kind of held his hand. So we had a good win on that trade. But these other trades he had entered off and on. Some of them I had helped him with, kind of walked him through. But you can see the losses and gains here. But we in the main thing I want to get across is our win percentage was 8.96 and our loss was 3.22. I believe that was right. And so we only had 3 out of the 13 that were winning trades. That, you know, it's like almost less than a 20% win rate, but we didn't lose money for the month. Okay. So if we position size correctly, we manage our risk and we stick to our stop losses, we can do this. Now, I know a $56 gain for the month was like, whatever, not that great, but we didn't lose. We're working on becoming a better trader. We're working on moving into the not losing trading category. Let me show you this thing here. Let me pull this up for you. So this is the evolution of profitable trader that nice apps, beautiful. That's great. So the evolution of a profitable trader, this is from liontrader.com, which they posted on Twitter, giving the props to them. But so the unprofitable trader is here, small wins, large losses, negative trending equity, poor risk management identification. Then we move into the boom and bust trader. That's probably where we're at with him at the moment. He's had some big wins, but our losses are roughly about equal or less than what we're doing. So we're going to tighten that up a little bit. We did have better trade identification. I wouldn't say poor risk management. We cut our losses. Profit taking too early. It was a tough kind of end of the month for a lot of people. So, but then we want to move to the profitable trader, which is larger wins, smaller losses, positive trending equity. This is what your equity curve is going to look like. But we have all these reasons here. So know when to be in cash, which would be a market, watching the market, less profitable trades run, cut losing trades quickly, good trade identification, and good risk management. So these are the 3 kind of levels that we want to be in and move into for us to become profitable traders. So hopefully that helps. But again, that's what I wanted to get across on that is you can have a lot of losses and still only be right 2 out of 10 times. And you can still be profitable and not lose money. Okay. So if anybody needs any help with that, please DM me. Again, I would be happy to help people just through DMs. And then also I do some other stuff that people that need. All right. So I want to talk about relative strength. Got a lot of questions about this today. Let's go ahead and look at this IBD 50. So this is investors.com. They have a great screener on there. It's where I get on my stock list. It's $30 a month for the digital. They have tons of other stuff on there. I would suggest it for anybody that wants to do the CanSlim type system. It works very well. But this is what I was looking at today so I sort this at the end of the day and I look at how many stocks are showing relative strength. So this would be the stocks that are not red, that are holding up green. And these would be the ones that I would look at for the rest of the week or the month or whatever. So I've just sorted this by price change. And these are the 3 stocks that held up today. We can go to the IBD 50 and I'll sort this by price change. And this will show you the stocks that held up today. Okay, obviously DT had a huge move, but these stocks were kind of bucking the trend towards the end of the day and finished in the green and positive. So depending on when EPS is, these are ones that I would be looking for going forward. Apps, obviously, I think they might have EPS today. Did they have EPS? Probably. Yeah, they crushed EPS. Okay, so that's that's a $100 stock for me. I'm pretty sure that's probably going to go to $100. It's above 70. Now, it's not going to be without some volatility and pullback, but that's one that we want to be in. So that will change my sheet here. So apps will be up to 73. So add 10 more to that. So add another 1,500 to that. So then our gains will be over 50% on this mock portfolio there. So that'll be wonderful. So, okay, that's what I want to talk about that. Then, so how do I find my stocks that I want to trade? Well, first I go through all these IBD lists you can see here. So basically these are growth stocks. If you read How to Make Money in Stocks, these are growth stocks that are growing that institutions want to own. And then one of my favorite lists is the IPO leaders. I think you all will recognize these as stocks that are basically just blowing it away. SDGR, we're up over 40% on that one. We've already taken profits. And I took profits and then I added back. And then today I had a great move. But again, these are new IPOs within the past year that are showing relative strength and are institutional ownership. Okay, so if you want to show, which stock showed relative strength today, just sort through here, sorry, and you can see which ones basically just, were bucking the market trend on the pullback, and these are the ones that you want to look for. Now, these won't be ones that I want to look for day trades. Okay, these are going to be swing to long-term trades. Now, you can day trade these if you want. They have excellent moves intraday. I would encourage you to look at the charts and look at the patterns and be able to do that. But again, I want to capture the 20, 30, 40, 50, 100% move over 12 months. All right, I'll show you guys Peloton and Chewy. Okay, those are two that have been just major moves in SDGR. But again, so that's how I sort by relative strength. Basically, all I'm looking for is stocks that are green and bucking the market trend when we start to pull back. That's exactly what I did when we had the 3-4 day pullback on the Qs. I sorted my list. I said which ones have pulled back the least percent compared to the market and which ones are holding the 21 day. And those are the first ones I look for to get in when the trend changes. All right. Another great place to go is finviz.com. This is a screener that I posted. Hat tip to Alpha Trends on Twitter. You can follow him, Jack. He posts great videos. He is not a full-time trader. He has a job and does part-time trading also. So if that is your situation also, I would suggest you check out his videos. But basically, all we're searching for is stocks within the last 3 years IPO'd, showing relative strength to the market. So that would be above all the key moving averages, and EPS growth quarter over quarter 20%. So these are stocks that are going to be growing significantly faster than other stocks that have potential to go higher. And I think you probably can recognize this list: Tiger Pins, Fetch, ZI, all these here, Chewy. So these are the stocks that when they pull back, I want to look for opportunities to get in when they set up nice bases. And those will be the stocks that we hold as a swing. As you can see in my mock portfolio, these are pretty much the same stocks I've been in, SDGRs down there. So then we'll go to some stocks that we want to look at, and then we'll go to some tickers. So let me go ahead and pull this back down. Hopefully everybody will be able to see this. So Chewy is the one that I think everybody would recognize, okay? But basically what I want to do is I want to get in these stocks when, sorry, let me go to the weekly chart. I want to get in these stocks when they're coming out of stage 1 bases. This is called a stage 1 base. If nobody knows what the stages are of stocks, I would encourage you to look up Stan Weinstein, excellent book. You can get it for like 20 bucks, or you can look up how to make money in stocks. But here's our stage 1 base on Chewy, okay? This is kind of like the IPO, like due diligence phase where most institutions are deciding whether the stock is really worth getting in. And then we start to break out of the stage 1 base, okay? Really not on as much volume. This was a kind of bigger volume day, but you're still just kind of in this breaking out of the stage 1 base. And then we start into the stage 2 accumulation. Most stocks within the first 3 to 5 years have this most exponential growth after their IPO. This is what I want to capture. I want to capture these moves right here. So from March to December, basically we had a, let's just say here, we're not going to top ticket, but let's just say it's around here. So we had 175% move on this. Okay. Now, if you didn't hold through this whole thing and you were in and out multiple times, then you could probably do an average of 50 to 60 to 70% for your portfolio. So this is just one position. Okay. This exponentially changes your portfolio size and, your money for, your life. Okay. And that's what we want to capture. That's my goal, to capture these. I've only had a few of these that have been 300% winners, but I've captured quite a few 100% winners. So that's what I want to be in, and that's what I want to capture. Now, within these larger trends, you can do swing trading also. Okay, so I know everybody wants to talk about that, but again, Peloton had a beautiful pullback here. The volume tightened up down in here, and we started building a base, and then we started breaking out. So this is where I want to get in here with my risk down here. Okay, and then we can capture these moves right here. So these are smaller moves within much larger bases of a weekly to daily time frame. So, okay, so it's a 30% move right there within basically about a month. So that's what we want to capture if you're doing swing trading. All right. Again, Peloton has had this massive move, And obviously we know it was driven by some stuff going on, but that was 377% move there. Okay, so even if if we use a simple trend following system, if you're using the 50 MA, which is the 10-week MA, which I showed on my mock portfolio, you never got stopped out of this just by using this simple trend following system, the 50 MA. Now you could have taken some profits off, back and forth when you were up and let this ride. And then when it broke the 21-day, you could have been out, broke the 50-day, you're out of the rest. But this is what we want to capture, okay? These massive moves. These are the things that Bill O'Neill talks about, how to make money in stocks. This is your life-changing money, okay? 100 shares of this going up, 100 to $200 or $200, 300%, just massively increases how much money you have to invest and trade with, and this just changes your life. Or let's just say you have a 401k or IRA, and you set aside a certain amount to capture these massive moves. Okay, this is what I try to do, and this is the plan and the game plan, and that's why I don't trade 5-minute charts. That's why I'll show 30-minute charts for swing trading, but in my longer term accounts, this is what I try to capture. And how do we find these? It's in How to Make Money in Stocks. Okay, it's a new product. It has crazy EPS and growth, and institutions want to follow over themselves to get that. And that's what this fingerprint is, or elephant print is over here, this volume. Retail traders cannot produce this amount of volume. This is just massive volume. Institutions are trying to follow over themselves to get in, and that's what happened here. We had this sell-off day that couldn't break the 21-day, and then institutions just came in and loaded the truck on it and drove the price up. And then the same thing over here, break out of this base, institutions couldn't get enough shares here, so they drive the price up 30%. Hopefully that helps everybody there. So apps, let's just look at apps since it's up there, and then we'll go to some tickers. So apps, again, this thing is up. I don't even know how much. I mean, it's just nuts. So let's just say you even took this base right here with the massive breakout. So we're up almost 400%. So this breakout right here on huge institutional volume, let's just say you got in these 3 or 4 days with a small amount of risk. I mean, just a small amount of risk to your portfolio, and you build these positions. Okay, so let's talk about tiering in positions. If I'm going to get in a $5,000 position, I don't immediately start with the 5,000. I'll start with a 60% or 70% position. Then I'll put another, 20% on, and then I can put another 20% on. You can tier into the position however you want to do that to also reduce your risk. And then you just, follow the trend. Never broke the 50-day here. So we could take some off when it's up, 30% at our normal profit taking goal. So that was up, so the gap up was 45, 100%. So you could have took half of your position off, let it just trail stop the 50 MA, and then when it broke out again here, then we're taking another position. Okay, so this is how we tier in and tier out, and this is how we ride these for our much larger gains. Okay, all right, so I'm going to go ahead and go to the tickers. It's 4:37, so I got about 8 minutes left. If anybody has any questions, post them in the chat. CRSR is a long-term position I'm in. Yes. So what I want to show on this is actually this. So this was kind of the IPO run for me, and this is the stage 1 base at the moment. Some people might disagree, but this is the massive stage 1 base that I'm looking at right now. Okay, that's building. As you can see right here, that's institutions. Okay, that's $14 million in shares. There's no way, actually, and over here was another 10 million. There's no way that retail traders can be putting this amount of shares in, and then we had 6 million over here. I believe EPS is coming up in a few days. So I'm definitely looking for this to break out. I think my average price now is 36, something like that. So I'm up decent on it, but I'm looking for a larger move. I'm looking for this to go, 1, 2, 300%. Does it happen? I have no idea. Okay. So Zynga, it's under $10. I don't know what the EPS is. You know what? Here, I'll do this for you guys and gals. I'll just go ahead and pull up Market Smith, and I'll show you. Now, Market Smith is slightly expensive per month for the average trader, but I'm gonna show you how I look at stocks like this. Because Zynga, I have no idea what the EPS is. Again, if anybody has specific questions, throw them in there. If not, I'm just going to flow through some tickers. So Zynga, let's see, sales. So sales going, actually showing some profit there. So actually not bad there. Institutional ownership holding steady, and some decent funds that I, like to see are in it. My only concern is this our relative strength rating. Okay, so that is the relative strength showing to other stocks, and then the S&P 500. So I like to see this trending up, but institutional volumes come in. So yeah, it's not one that I would get in. Okay, it could have huge growth, but for me, it's not really one that I'm going to say like maybe this has the opportunity to go up 1, 2, 300% within the next 6 to 12 months. Okay, so that's why I would probably not be in that one. But if you're looking to swing trade, then that would be good. FCell, of course, that's the EV play. Just massive run so far. I wouldn't be buying it up here at the moment because we really don't have a base to trade against. If you're doing swing trading, you could trade against the 21E, but you want to see a weekly base. Okay, there's just no weekly base at the moment. It had the stage 4 markdown, okay, which was here. I'm not sure when this IPO'd. I like to have, I'll tell you what, here, I'll just pull this up over here. Let me see when this IPO'd. Okay, so again, remember that most stocks from first 3 to 5 years have their most rapid growth. So so the IPO on this was 92. Okay, so this is a pretty old company. All right, and not saying that it hasn't grown, and it went into the stage 4 base, and then now it was in the stage 1, and now it's in stage 2. Okay, so it definitely could be back. But if you look left, you see where it's getting into. Okay, it's getting into these old highs right here. So could this be an area of consolidation? And now again, that was back in 2018, but could this be an area that it decides to pull back and flag? Absolutely. Okay, even though it was about 2 years ago and people that were holding over here were probably not still holding, but that would be something I would look for. Okay, again, when these things get this stretched, basically you're in no man's land with these stocks. Okay, there's nothing really to trade against. Now if you're swing trading, you're trading against $20 here or the 21. This could easily go higher. It's trending higher, but you have to be able to think about your risk. Is do I want to get into a very long-term play here where I'm going to hold it for weeks to months? Probably not, because we want a sound stage 1 base coming out of stage 2 base. So your long-term hold entry would be down here, and then you're into your stage 2 base, and then you're managing the trade. Okay, Fubo, I haven't looked at that one. Default back here. So again, nice run, but it's coming into this kind of overhead supply here. Good institutional, volume. So I definitely, but again, it's pushed away from the 21 at the moment. So your better entry was down here after it recovered the 21 and then took out this flag high. So your risk was much smaller. No reason for me to enter here. If it pulls back to the 21 and builds a flag and a base, shorter term base for a swing trade, then I would, be interested in getting in that. Neo, that was one I was in and and got out of. I'm back in now. I like it versus this 54.37 level. I would like to see more volume today, but this is just a swing trade for me. It would not be a long-term hold at the moment because of where it's at in its base and stretched. It is building a nice flag here on the weekly though. So this is definitely an area to look at. So again, if you read How to Make Money in Stocks, there's areas where you can add, and that would be a pullback to the 10-week or a pullback to the 50-day. And again, you see how, we're kind of just in between the 21 and the 50. So this could be an area, and then we're kind of forming a downtrend line here. So I would like to see this. I can't remember when EPS is. I would like to see price push through this area on big volume. TTD, yes. TTD is one I was watching. That candle today is not very pretty though. Okay, so I was looking for a longer term entry on this from a weekly time frame. But again, this is just forming a total weekly base. So if you go by How to Make Money in Stocks, this is forming a base. Okay, a large base. That's all it is doing. You can see wherever SPECT is at down around the 730 level. So for this to break out, let me see. So another great thing about MarketSmith is they have pattern recognition. As you can see, they cup here on Sumo without, that was just a cup without a handle, and that gives you the pattern recognition. So we can look at TTD. Whoops, I'm not sure if it's even actually building a base at the moment. Let me see. So pattern recognition is not even saying a base on the daily and the weekly. So it is starting to consolidation, basically, is all they're calling it at the moment. Okay, so consolidation can be 7 to 15 weeks, and the depth right now is 25%. So that's all it's building. So for me to enter this, I would need to see it, really start showing relative strength within this consolidation. And then whenever they have the earnings, which is 227, so earnings are soon. I think that's about. Let me go back. Oops, sorry. The other one I was looking at. Marvel was the other one. I think I like this one. Yeah, some distribution happening at the highs, which is normal. Again, just follow your plan if you're swing trading or if you're a longer term trader. If you're a longer term trader and in from over here or in from over here, then you're trailing the 50-day. What was the other? DKNG. I like the look at that one. Nice volume and nice gap up today. I don't know when earnings are. So this basically is just a big base here. Needs to basically push to highs and push out this base. Plug, yes, I was in that one. The definition of a high tight flag on the PDF is this is ran 100%. Let me see. High tight flag, 4 to 8 weeks to 100% uptrend. So that's over the 4 to 8 weeks. And then it needs to do 3 to 5 weeks sideways and 10 to 20% pullback. So yes, it could be definitely looking at a high tight flag, but it's over the 4 to 8 week run up and 100%. But yes, I like the look of it here. Will it keep going higher? I have no idea. Depending on what your risk management is, obviously trading against this 58 or the 21 day would be your first stop, but then the weekly, it would need to keep forming this, but that's what it's doing at the moment. It's forming a flag. So Big C, yeah, it has earnings though, right? Let's see. I think earnings are soon. 218 with an asterisk, so 15 days. Okay, yeah, and I like this. It had the huge IPO run up. We'll see what the EPS is that comes out. I like the daily chart. This is just a massive stage 1 base, so it's looking like CRSR and ZI. Institutional ownership stepped in here on that, which is great. But we got 2 weeks to EPS, so would I be entering here? Probably not, just because EPS is soon and that could go either way. So I just really don't have an edge. Now, I mean, I'd like to see EPS come in. I'd like to see this gap up to, 115, 120, kind of chop around there and give me a level to trade against. And then I would be in for the next move up. Okay. And I don't mind buying stocks that are at highs. Okay. Usually stocks that are at highs go higher. So, don't be afraid of strength. So PNW must have had earnings and gapped up. So now what I would want to see on PMW is this has to hold this 375 level, is the minimum that needs to hold, which it's doing. And then I would want to see it build a nice kind of flag right here. And I'd like to see volume dry up as the volume kind of comes down to the bottom of this flag, see volume dry up, and then it get ready to break out of the flag. So that would be a good setup for that. So volume drying up basically just means the sellers are exhausted and the contraction is coming in price. And then that's what you want to see. Basically, it's called the VCP setup. So Mark Minervini kind of coined that in his books, and you can look at that. So yeah, I like it. I mean, long term, this has been a great stock. Just this is the massive stage 1 base that broke out of. It's in stage 2 at the moment, held a 10 week. So it definitely could go higher, but I would want to see the volume come in. Okay, that's so it's 4:48. If anybody has any other questions, hopefully this has been informative. Somebody asked me, hold on, somebody asked me about do the calculation for your number of shares. Do you want me to calculate that, or you want me to show you the sheet? Can you do it and show us how? Sure. Okay, so let's do, I'll just do ZI. All right, portfolio entered. Okay, so ZI, I was watching this yesterday. I'll just give you an example here. I'm just going to use a round number for the portfolio, and we'll use our sheet. We'll use, we'll use our sheet right here. Okay, so we'll do this. We'll shrink this a little bit, and we'll do this. Oops, sorry about that. Okay, so we'll move it over here. Okay, so we'll use a $50,000 portfolio. Let's just do that. All right, so ZI yesterday, we've been watching this for a while. I was in it, and then I took it off. It's just been a crazy kind of stock moving back and forth. If you're in it, you have to give it a decent amount of room. All right, the one thing I want to show you guys is this was building higher lows. Okay, so here's a low, here's a low, here's a low. Okay, so this is building higher lows, and this is what you want to see. And then the other thing you want to see is you want to see these moves or these contractions get smaller. Okay, so those were about the same, but these contractions started getting smaller. Do you see that? And then this contraction here got real small. So this was 25%, 25%, 14%, 11%. See what happens with volume on these contractions? They start getting lower and lower. See that? Okay, and right here was extremely low volume contraction, and that's what I want to see. Okay, so the sellers are getting exhausted, and they can't push price any further. The ranges continue to tighten up, and that's when we get these moves. Now, preferably, I would like to see this go from 25 to like 12 to about 5 or 6, and then to 3 and get extremely tight. But you can see these closes here were tight here. See these closes? Okay. So then yesterday, or we started getting massive volume. So this day right here was one of the lowest days on volume that it's had in a long time. Everybody see that? And everybody see the closes from the two previous days were almost the same. So this tells me the sellers are completely exhausted. So the only thing that's probably going to happen is, I don't forecast, but that this could definitely break out. All right, and we can even draw a downtrend line here if you want to do that, kind of formed a flag, and then broke out on big volume the next day. And then the following day, another massive volume, but we see what happened is price came down and almost finished at the high of the day, 3/4 top of the range there on big volume. So buyers stepped in and said, I'm supporting this stock. I'm going to buy as much as I can. And then we got our breakout today. So I entered yesterday on this test. That's funny. I entered yesterday on this test of the 21E. I think our average is around 48. So let's go to our $50,000 portfolio. Okay. So we could change our share price to 48 here if we want. Let's go ahead and expand this. There you go. So if it's a $50,000 portfolio, I'm not going to enter my total position yesterday. Okay. So I want my position size. If I'm giving this 1% risk, so 1%, I'm sorry, if I'm giving this 7% risk, okay, so I'm going to give this basically a $3.50 stop. So if I entered yesterday at 48, 350 would be down here below the low of the day and then below the 21E. All right, so I'm giving that $3.50. So for a $50,000 portfolio, and if I'm risking $500 total, I'm only going to enter 143 shares. That would be a max position that I'm going to enter. So yesterday, if I wanted to buy a 60 to 70% position, then I probably would have only entered, you know, roughly in between 75 and 100 shares. Okay, so that would have been my position. Then my stop loss would have been 7%. Okay, so $3.50 from the 48 or $50, wherever you would have entered. So my stop loss would have been this. My position size would have been about in between 75 to 100 shares. So that would have been my position size. And at that point, my risk, depending on 100 shares, would have only been $300. So my portfolio max risk would have only been 0.5%. So that's what I'm saying about tiering into positions. All right. Don't go all into a position if you want. Buy 60% of the position. And then when it starts to move in your favor, buy some more. Okay. So when it broke out today, you could have added to another 20% to your position, maybe ran the same stop loss or a little bit different stop loss. Okay. Because what's going to happen to this stock is it's going to come back. Okay. It's going to come back into this price range. If it doesn't, great. Okay. We've got a crazy strong stock, but it is going to backtrack some. I'm just telling you right now, be prepared for this to even backtrack almost maybe to your entry. All right. But if we want to capture a much larger move than 2 or 3 days, and I want to capture 100% move, I may even get stopped out of this at break even. Okay. Or just with a small profit. But then I put it back on my watch list. This is an institutional stock. And I set alerts again and I get ready to get back in. Okay. I can be stopped out of position before 100% gain 3, 4, 5 times. Okay. But my small losses, when I get that 100% move, is going to completely wipe out the losses I had, and then I'm going to have a positive profit. Okay, so that's how I would do that. Does that make sense? Cut losses, how I figure that out. And basically all I'm doing is using this Excel spreadsheet. So set it up for your portfolio. Put your portfolio size in here, set your stop loss, and these will never change. Okay, you can even change this if you want, your share size. All right, but have this ready to go when you're going to enter a position on your computer. It's automatic, it's binary. You punch in the numbers and then you go. That's it. Okay. And then I let it go. It's my stops are in Interactive Brokers. If I'm away from the computer, my stops might get hit. Okay. Now, if this stock goes up 30, 40%, I may take a little bit of profit. Okay. I'll take maybe a quarter, a third of my position off. I'll leave 2/3 on. And most of these stocks, okay, let's look at SDGR. Okay. One I'm in right now. This is what happens. Okay. I was in down here, rode the 21 day, keep my stop loss at the 21 day. I took profits up here. I took 1/3 off. All right. I was up 40 some percent. I took 1/3 off. Guess what happened? Came back, tested the 21 day, moved back above it. I put that 1/3 back on. So here's my risk. I'm up almost 10% on the 1/3 that I put back on, plus my original risk here from this breakout here. Okay. So I gained 31%, took a profit, and then I'm up 30% or up another 10% there. So my average is doing great. All right. So my core position's still on. My ad is working well. It raised my average price a little bit, but not much, because I took 1/3 off. I had 2/3 on, and then I added 1/3 back. Okay. So hope that helps. So it's 33%, 70% for position size based on examples. Yes, correct. Okay. So basically all of this is depending on what your position size is going to be, okay, and what your risk is going to be. So if you're running a tight stop loss, you're going to have more shares. If you're running a wider stop loss, you're going to have less shares, okay? But it's the same amount of risk. Same amount of risk. That's the thing, is just because I take more shares, I'm not risking more money to my portfolio. Okay? That's the key concept of this whole thing. Now, obviously I want to be able, I don't want to choke off the trade, but I want to stay in the trade as long as possible, okay, to allow it to run. All right. So all this is doing is telling you is if you take a wider stop, you're going to have less shares. Okay. Less shares, because your risk needs to stay the same. This risk, your max risk, should never change. All right. And then you need to calculate portfolio risk. If I have 3 positions on and each position is 1% risk, then I have a total portfolio risk of 3%. So if all my stop losses are hit, I lose $1,500. Okay. Yes. I mean, you have to have a spreadsheet like this, guys and gals. You have to do this. All right. You have to journal this stuff. You have to have a swing tracking sheet that has your stop losses already set up anytime you enter a trade. And that's what I'm saying is, day trading is different. All right. Swing trading to longer term trading, this is how you have to do it. Now, day trading, you can do the same thing, but you have to have this risk in mind. All right. So you have to know, if I take this, what's my risk to my portfolio? Okay. Like if I'm taking 1,000 shares of, I don't know of what everybody trade today. NEO, I don't know. Let's say I'm taking 1,000 shares of NEO. I have to know that my stop is going to be extremely small, because I'm trading on a 5-minute time frame. I don't trade 5-minute time frames. I trade 30-minute, daily, weekly. Okay, so my stops are going to be set different. Hopefully that makes sense. Okay, great. Thanks, everybody. Sorry it went just a few minutes longer. I'm going to go ahead and stop here. I'm going to stop the recording. I hope